Over here in the United States, it's very difficult to put a specific number value on the parks. We've often said that probably $80 a share is a good way to quantify how much the Disney parks themselves are worth. Well, over there in Tokyo, the OLC runs their own Disney parks, and now a report out of Forbes says that parks are worth less than half of what they were worth 2 years ago. Let's talk about that on That Park Place. Hello, I am Jonas J. Campbell, an investigative reporter for That Park Place, and here with me from a remote location is Mr. VashSky. Vash, you've got some info for us today out of Forbes and Miss Caroline Reed, don't you?
I sure do. This was an article that dropped a few days ago. It's been definitely on my radar for a little bit here because the headline is pretty unbelievable. Let's go ahead and go to it right now. This from Forbes, Caroline Reed, as mentioned so beautifully by Jonas J. Campbell there. A Disney resort operator that's worth less now than it was 2 years ago.
Now,
Not so good.
I hate to interrupt immediately here, but OLC owns two parks over there in Japan, and that is it. Is that the entire holdings of the company as far as we're aware?
Essentially, yes. It is just the two Disney parks there in Tokyo.
So then this would be that the parks themselves in Japan, this is not necessarily a comparison to the United States, but it could speak to the strength of the Disney brand itself as far as theme park operations.
Absolutely. It certainly can. And Caroline Reed actually makes the case somewhat in the later part of this article, which is very interesting. But I just before we even get into it, I do think the degradation of the Disney brand is definitely contributing to this, at least somewhat. I think the bigger issues plaguing the OLC is definitely Japan's economy. We'll go ahead and get into that right now. When theme park operators spend billions of dollars on an expansion, they don't expect the value of their company to plummet over the 4 months after the doors swing open, much less plummet by 4 times the amount that they invested. However, that is precisely what has happened at one Disney resort. At a cost of $2.1 billion, Fantasy Springs, the latest expansion that just opened at Tokyo Disney Seas, isn't just the most expensive expansion in the 41-year history of Tokyo Disney Resort, but also one of the most costly additions at any theme park ever. So it came quite a surprise when we revealed that the company which operates the resorts expects attendance at its two parks this year to be 11% down on their high of 32.6 million in 2019, despite the addition of Fantasy Springs. But in fact, this is entirely logical. Caroline Reed goes and talks about how they actually accrued these figures and how it's interesting because of the unique setup that the Oriental Land Company is set up in. They have to disclose a lot of their filings because they are a public stock exchange on Japan's Nikkei. So that's quite the interesting thing that the Walt Disney Company doesn't necessarily have to contend with. And she makes that point very clear that Disney doesn't even release its attendance figures nor its basically any of its details.
Right. So whenever we are forecasting attendance, we're doing that through all the companies that collect that survey in the same way that Disney never releases real figures on how many people watch their shows. We go to companies like Nielsen or Samba or Luminate over there from Variety in order to figure out how many people are actually watching these shows. OLC is much more forthright in how they're doing. They also only have one company working underneath them. They are a subsidiary of a railway company over there, Keisei Electric Railway. But in the United States, when we are looking at the stock price of the Disney company, that can fluctuate based off of perception of the television business and the streaming business in particular. The streaming business having been the biggest earthquake within the stock price. The OLC is not worried about Disney Plus, and over there, even Hulu Japan, nothing to do with Disney over there in Japan.
Well, yeah, and even the subdivision that is the experiences division, even that encompasses consumer products and cruise line, as noted here by Caroline Reed. So to get a hard data on any of that is, well, it's tough. As OLC is listed, it is obliged to release detailed quarterly financial results as well as regular forecasts. OLC's latest projections show that attendance is expected to rise 5.5% to 29 million in the year to March 31st, 2025, which isn't just lower than the 2019 financial year, but also lower than the 5 years leading up to it. That is particularly bad. Caroline Reed makes note of the macroeconomic conditions facing the OLC and the resort specifically, but it's really tough to make this amount of investment and have it not really pay off in the way that you were quite anticipating. And it does kind of speak to the risks involved in investing in parks to this degree, but I think it would have paid off had it not been for some factors outside the OLC's control.
Well, it also speaks to the global perception of the Disney brand. I know what's going on in America very specifically. I can't speak to how the Japanese culture perceives some of the unusual tendencies of the Disney company. I don't mean to use the phrase "get woke, go broke," but there has been a visceral reaction in the United States to Disney abdicating their place as a family-friendly entertainment company, now to the point where a lot of parents want to know if there's going to be something unusual inside of a children's film. There's also the number of grown people who watched or would tune in or buy tickets to a Disney movie or something like that are just not interested if the shine starts to come off and they realize, well, this is a grown-up movie that happens to look like a kid's movie. That's essentially what they're doing over here. And maybe the theme park market is drying up in some way, which I say that as a maybe when we're looking at Epic Universe gearing up over there, Super Nintendo World over there in Japan doing gangbusters figures. So I don't know, is Fantasy Springs just not something that's going to bring people into these OLC, those Tokyo Disneylands and Disney Sea theme parks? Vash, you are an expert on theme parks. You are heavily involved in a lot of Disney fan spaces. Are you seeing interest in Fantasy Springs, or is this just something that they spent a lot of money on and everyone's going, nah, I'll pass?
I think there is interest in Fantasy Springs. However, I don't know if it's the driver that OLC was expecting when they initially invested into it, and that's kind of weird to say. It's weird because consumer patterns have very much changed post-pandemic. We see a lot of people either opt not for a Disney vacation, or when they do opt for it, maybe not splurging to the degree that they might have before, and becoming far more, I would say, critical of the value statement of that. So when you look at something like Fantasy Springs, at least in North America audiences, obviously it's quite an expense to actually get down there to actually see it. So the question now becomes, is it worth seeing? And because I think we have so much, I would say, duplication of some of the ideas featured in Fantasy Springs and other resorts around the world, the question becomes, is it necessarily worth it to see it there? It's an interesting question, and Caroline Reed actually talks about some of the key challenges facing the resort, not just that, but others, like one is driven by macroeconomic factors, as Japan is still in the process of emerging from the pandemic itself. Japan experienced the worst of the pandemic later than many other countries, so it was still dealing with it when the deadly disease was a distant memory elsewhere. As we've reported, OLC's filings reveal that one of its objectives in 2024 has been, quote, recovery from the pandemic. Surprisingly, the pandemic is still affecting travel decisions in the region, as, quote, the number of guests from mainland China has not yet recovered, according to OLC. Its filings add that the number of Chinese tourists it is due to an increase in the 2025 financial year, quote, although not to the pre-pandemic levels. Despite this, OLC forecasts that Fantasy Springs will give a magic touch to its revenue, as it is expected to rise 10.7% to $4.6 billion, and that's a large number in yen in the 2025 financial year. This is partly driven by an anticipation in surge in spending per person on park tickets. Disney Tokyo Disney scrapped its discounted multi-day tickets and annual passes during the pandemic and still hasn't reintroduced them, so guests now have to buy a separate ticket for every day of their visit. So that could be a factor in the, let's say, the North American market, let's say, or even the Chinese market, looking at Tokyo Disney Sea or Tokyo Disneyland, I should say, and seeing whether or not it's worth the value if those lower or discounted tickets are available now.
So I just have to ask, am I reading this last line correctly? More guests that come because of Fantasy Springs, the higher the spending on tickets, which explains why this is set to surge 9.9% to $60.50. So just for the sake of anyone who doesn't understand, Disneyland tickets in Anaheim, the tier 6 tickets are now above $200, right?
Correct. Yep.
And are they saying that $60.50, otherwise known as 9,000 yen, are they saying that $60.50 is all you have to pay to get into Tokyo Disneyland right now?
It is around that. It is around that price point. Yes.
Okay.
Yeah.
Let's just soak that in, everybody.
It is crazy when you look at it. It is the value proposition, at least when you're talking dollar for dollar, park for park. It's incredible with Tokyo. It always has been, which is interesting. I do wonder if it's attempting to cater to a local market primarily, and maybe to offset costs associated with travel to Japan. I'm not quite sure why they price themselves that low, but they always have, and that's a real interesting thing there. It's a different story for merchandise sales. OLC forecasts that the amount each visitor spends on merchandise will decrease by 3.4%. So part of your per caps there to 33.33 in the 2025 financial year, despite the opening of Fantasy Springs. There's good reason for this. Tokyo Disney's attendance grew by a staggering 24.5% to 27.5 million in the year to the end of March 2024, thanks to the 40th anniversary celebrations at the resort. Indeed, the birthday party did too good of a job. It actually talks about how they're looking at maybe a significant impact in merchandise revenue based on the 40th anniversary actually going away. So the ebbs and flows of this business are starting to affect them as well. It's just really fascinating, Jonas, to look at this resort and by the outside, and especially the quality therein, you're thinking, oh man, this should be the most successful resort on the planet. And I think for a time it was, man, that pandemic, and combined with maybe the diminishment of the Disney brand itself and behaviors when it comes to tourists and so forth visiting these places, has really done a number on it.
Well, and there's also now 2 theme parks in China, one in mainland China and the other in Hong Kong. So
True.
Perhaps there is more of a discouragement, or maybe they want to visit those China theme parks, which obviously Shanghai opened up near the end of the pre-pandemic era here. So I just have to wonder at this point. This line right here: since the start of the year, OLC's market capitalization crashed by 22 billion, with around 9 billion of it lost in the 4 months since Fantasy Springs opened. On Thursday, its stock closed at 23.61, its lowest price since May of 2022. It has only jumped by 0.5% since then, putting it 31% lower than when it opened at the start of the year. So this is the kind of thing that opens up a company like the OLC to hostile takeover. I would hate to see something like that, because as everything we've heard is that Tokyo Disneyland is almost like a working everything you would want in a museum, essentially, for what Disney is supposed to be like. A Disneyland is supposed to be like, merging in the elements of Disneyland and Magic Kingdom into one wonderful theme park where the Japanese commitment to shows its face. We've heard that Splash Mountain over there is actually fully functional in a way that neither the Anaheim nor the Orlando versions ever were after the first few years. So this is a company that I think, from a Disney standpoint, we would all like to see them succeed. As Parks fans, I'd like to see them succeed. I don't know that the Bob Iger Corporation over there is necessarily interested in this company that only charges $60.50 for surge-priced tickets. I don't know that he wants them to succeed out there charging a fourth of his surge price tickets over in Anaheim. My goodness. My goodness. It's horrible to think about. Anyways, I want to throw this to our commenters. What do you think about the situation out there in the Oriental Land Company in Tokyo Disneyland? Do you think the company is actually worth half of what it was, or is this something where the Disney brand itself is to blame? We'd love to know your insightful comments in the comment section down below. Like this video, of course, if you like this video, and consider subscribing to That Park Place for all the news that should be fun.
Thanks for watching That Park Place News. For more information, consider checking out www.thatparkplace.com. And don't forget to subscribe, share, like, and send this out on your favorite social media accounts.